Hello friends, welcome back to the weekly talks with Squeezy Realty. Today we're going to discuss the current market situation in the metropolitan areas of Texas. This is one of the questions I receive a lot. With the economy being staggered and basically being frozen for the whole month, we still see the prices going up, inventory goes down, and a lot of demand for the housing. So let's try to study this problem a little bit more, try to understand what's actually happening here. I believe there are three main factors that affect this whole supply and demand problem. Again, the prices are dictated by supply and demand. This is very basic principle of economy. So we have low supply and high demand. But what actually affects it? I think the first, probably one of the most important thing, is the migration. We see a lot of people, a lot of influx of people from three states, specifically California, Illinois, and New York. Those are the states with the high taxes and very expensive real estate. With the jobs either being lost or allowing employees to work remotely, the employees do not have to stay in the same city anymore. They can actually live and work in the more affordable areas and still being employed. So this could be one of the factors why a lot of people decide to move from the areas such as Los Angeles, San Francisco, New York City, and Chicago to the areas such as Houston, Austin, Dallas, and San Antonio in Texas. Let's look at these pictures here. This picture was provided by Bloomberg. It outlines the states where people moving to from the state of California. Most of the neighboring states, including Texas. Similar situation in Illinois. We see some other states, including Texas. And if we look at New York, again, a lot of people move to Florida, but also Texas is here as well. So as you could see, in all three cases, we have a lot of people coming to Texas. And that also brings a lot of money into the state and a lot of buying power to purchase new houses. So that's one of the factors that drives the prices up. The second factor are the interest rates. You probably noticed that the interest rates were going down for the last few months. Right now they're hovering about 3%, depending on the lender. And also remember that those 3% we're talking about are for primary residence. So they're not for investment or secondary home, which would have different interest rate as well as different requirements for the loan. In any case, this cheap money draw a lot of people thinking that this is a good time to actually start buying the houses. In the time of cheap money, we have to be worried about something else. Here's the factor number 3 comes into play. As you know, back in March or April, the government put a lot of money back into the economy. And to be particular, it was $2.4 trillion. This money basically dissolved the value of dollar. Or at least some people thought that what would happen. Of course, that would bring the inflation in place. So far we haven't observed significant inflation, but it's still a possibility. With the inflation, people tend to invest money into assets that actually stable and have the value that appreciates rather than depreciates. So instead of keeping the cash, people start buying things. And those things could be precious metals or houses. So here it is. We see again there's a huge demand for houses. At the same time, the people who actually have the houses, they don't want to get rid of them. Not at this point. They would rather hold to them and try to sell them when the inflation actually strikes. Similar situation we can see on the market for the precious metals, or gold in particular. So the price of gold was rising significantly, pretty fast for the last few months. It retreated a little bit because of the stock market. So the people who were buying gold now prefer to go back to stock market, which is actually much a riskier asset. Anyway, so here are three factors that we discussed that actually influence the supply and demand. There is also such a thing as moratorium in place, and this was put by government till the end of the year, which basically means that people with FHA loans who do not pay their monthly payments cannot be evicted by the lenders. Now, whether this has an effect right now or it will have effect in the future, the time will show. As of now, we're done with this topic, and hopefully you will receive some useful information that you can actually apply in your decisions, whether you're trying to buy or sell or rent a house. You always can refer to us. Please ask questions, write the comments. We'll be happy to reply to those and get in touch with you for more information. As always, follow us on the social media for the latest updates. Have a great week. I'll see you next Monday.